think thank you very much to have me here this afternoon. I was listening in. I came in the afternoon, and I was listening in to see if I could actually, catch up and follow the discussion. I was seated right there with Robert so from FSD and CISE. I didn't know you're from Glenbrook, so I just got to know a few minutes ago. And to be honest, I did follow a lot in terms of what the conversation is all about. And to an extent, it speaks to some of the challenges that we are going through as central bank, as policymakers, especially in this area of digital payments, and what we are asking or questioning ourselves in terms of what we need to do more to be able to address some of the challenges that we face. But first of all, let me take this opportunity to welcome you to Nairobi. I know I heard that my peer central bankers are in the room. Maybe wherever they are, maybe can you just raise your hand up? Thank you for coming. Please make time to visit us at the Central Bank before you leave. You're most welcomed. And I think my work today is very easy. As I said, I'll just share with you some of the challenges I think I see, or we see from a central bank perspective that our market is facing, and what are the opportunities that many of you can actually be able to play in addressing some of those challenges. But I think to set context is, so our role and drawn from our mandate is mainly around ensuring that we have a safe, secure and efficient payment ecosystem. And from that, then there are a lot of policy initiatives that we draw. One of those is probably around how we promote and deepen the usage of digital payments. And from a country perspective, we've done very well. There's still a lot of opportunities for us to the opportunities for us to improve in that particular journey, and that's part of what I'll be sharing with you in terms of that journey, but also just the Kenyan payments journey, and where do we see ourselves going forward. So I think I'll start by next. Okay, so sorry, I think it's the first slide. So I think the first slide just talks through our payments journey, and try to just kind of squeeze it in together. But I'll summarize that journey into two things. So initially, I think when the whole payments journey started in the country back in 1989, and many of you may remember, was through the introduction of ATMs. There were the first two ATMs, and it was quite a revelation, getting money from a wall. And there were ads, trying to depict how that is so. I remember there used to be an ad, I think there was a Barclays ad and there was a Standard Chartered ad. And that just kind of set out our modernization journey. And it was mainly driven around two themes. One, it was about how we automate how payments are done. And that then, if you look at that journey, it talks to what happens to the clearinghouse and that whole check clearing journey in terms of moving the clearing cycles from, it was I think T+10 to T+1 right now, gone through various journey, the check truncation. I think it started with the MICA, MICA, it used to be called magnetic ink character recognition. I think I was still a teller then in the banking world. And then, moving all the way to check truncation, all trying to reduce the turnaround time it takes to be able to clear a check. Right now, we're in the era of instant payments. So even when I talk about T+1, I know most of you in the room look at me and say, T+1, why not immediate and instant? So it just tells you how the journey has progressed. Then T+1 was quite a revolution. Right now, it's more about how can we ensure that payments are instant. But also, I think that whole modernization was also hinged around just the whole regulatory framework. How do we ensure that we have a regulatory framework and legal framework that supports the evolution of the payments journey in Kenya? So you may recall when M-Pesa came on board in 2006, it came on board as a test and learn solution, we didn't have a legal and regulatory framework in place. And in 2011, that's when we set out the National Payments Act, which has served us very well in terms of really providing us a base in which we're able to regulate payments in this particular jurisdictions, whether they're large value payments or retail payments. And as time has gone, we've also realized that maybe the way we crafted the law is not working for us. And maybe this is an opportune time for us to look at it and see, is there opportunity for us to ensure that that changes. But lastly, I think what we tried to do, and I'm just trying to brush it so that I don't take you through the step, was in, I think, last year, was it last year? Yeah, it was last year. As part of that whole digitization agenda, we tried to introduce, in our effort to promote digital payments, we were asking, and the colleagues here were talking about merchant payments. How do we digitize the acceptance of merchant payments? And we developed a QR standard, which was rolled out last year. For whatever reason, and I know some of the challenges involved, and I hope that the people in the room can actually be able to help us address that challenge, because it hasn't taken off where we wanted it to be. QR as a form factor payment to enhance, the adoption of the acceptance of digital payments by merchants. And that's the latest in terms of our journey. There are a lot of other things I'll talk about as we move on in terms of what exactly do we want to do. But I think that kind of just in a nutshell gives you our 30-year-old journey. So we've made progress, and you'll see it in the next slide. So I think this slide just tells you how we are structured from a national payments perspective, looking at it from a regulator perspective in terms of how we face the industry. So we have the market infrastructures. So we divide it into two, where we call the large value payment systems and the retail payment systems. We have the large market payment infrastructures, where we have our RTGS sitting there. We have the regional payments. I heard you talk about cross-border payments. So I think as a region, I think we were among the first regions that actually put in place a cross-border regional payment system, IPS, which settles among the ESC, settles in our local currency within the ESC countries. I think there are 5 countries that are plugged into that. Then definitely we have REPS, which is part of the bigger COMESA. And I think our colleague from COMESA talked about, I'm sure it's part of the things he looks out for, but we house it within the central bank to be able to facilitate the settlement across the border. But also I think increasingly, I think the need for us to go Pan-African is increasing. And we're trying to see how then do we integrate all these regional payment systems from a cross-border perspective to other cross-border region systems that exist, let's say, in the Southern African region and in West Africa. So a couple of initiatives that we're engaging at central bank level to see how we can interlink those. And then you have our retail payment structure, retail payment systems, where we have kind of what I've put there is to kind of give you a broad perspective in terms of how it's classified. So we have, the e-money providers, mobile money, and the wallet providers, very ubiquitous in this country. Some people may say it's an M-Pesa country, but we have other providers other than M-Pesa. Very successful, and you'll see it in the next slide. We have the switches in the room that are privately run, IPSL and others, InterSwitch, CanSwitch. Some are card switches, others are instant payment switches that we regulate. And then you have the clearing house. And lastly, you have the payment aggregators. All of them play a specific role within the ecosystem and licensed and oversighted by the central bank. Yeah, I think this is a slide that just tells you how we perform. And so when I say we are a mobile money ecosystem, I think nothing depicts this better than this particular slide. So ideally, 98% of all the payment activity that is done in this particular country is actually mobile money payments. So if you are in the payments business and you want to operate in Kenya, you have to ensure that you have a way in which you have mobile money as one of the products. Otherwise, you're a non-starter. Cards, I don't know if the Visa guys are here, they'll kick me. Struggling. And if you ask me why, I think we talked about merchants and the issues of merchants. Merchants are very sensitive about cost. And when you have a merchant service commission of 3%, while your competitors on the other side are doing 0.5%, it becomes very, 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 very challenging. But also issues to do with the liquidity. Yeah? So if I do a card payment and I'm a merchant, I always give this example. So on Friday, I pass by my local pub, I want to have my beer. And it's a small pub. So when I remove my card and I give it to the barman, he always finds a reason to tell me why the POS is not working. He says there's no power, there's always a reason. And if you try and dig deeper, you find out is that he has working capital challenges. So if I pay him by a card on Friday and he needs to restock the following day, it just won't work for him. So he'll find a reason to either make me pay in cash or, use another alternative that allows him to be able to receive the money because he can't wait for settlement to happen on Monday. Yeah? And that's what drives, the kind of usage. And it takes me back to the issue. And I know we are talking a lot about technology, and technology is only as good as the problem it solves. So if it's not actually solving a real problem for the merchant or the person, then really it doesn't make any difference. And that's some of the challenges we've had with cards. But we've seen also increasing acceptance of cards in the last data we've seen. I think that transition from physical to soft POS has increased significantly. Now we've started seeing tokenized cards in the market issued by banks where you can walk with it in your wallet. Has significantly, maybe the game changer, but we don't know, but we're yet to see that. Surprisingly, we still have checks that refuse to die. I've never known why they've refused to die, but I think it's because of, so when you ask, it's the same thing, what is the problem? And so I realized that we have a very big, a very deep rediscount, the rediscount, how you rediscount checks. So a lot of the SMEs and smaller SMEs still issue post-dated checks. So I do a post-dated check. It allows me to be able to get, whatever supplies I need, and then maybe at the end of the month, you'll be able to call me, can I bank it? And you bank it. And so used for the wrong reasons, but for purposes of kind of, providing working capital for small SMEs. And we've always had that debate as to, do we really need, I know in other jurisdictions, they've gone check, they've kind of banned checks. I don't know whether it's banned checks or whatever, but we've always debated from a policy perspective whether we need to go that directive. But also taking into account that how do we ensure that we don't also disenfranchise such kind of people, and by making sure that banks or microfinance banks where these SMEs provide have appropriate products for working capital that support such kind of users to be able to allow them to work. EFTs still very, very, very rampant. Somehow used by a lot of corporates. We see that corporates, paying salaries and things like that. And I think the dilemma we have, especially now that we move into the era of instant payments, whether we still have, we still need that EFTs as a payment method. And I always give this example as to where I'm arguing for instant payments and why we need to be able to move into the direction of instant payments for for retail payments is that, and it happens. So Thursday is what? Eve of Easter, isn't it? So someone runs the payroll on Thursday, and that payroll goes through, it's a big EFT file that is sent out to pay people. So a lot of us are waiting for that pay. So the accountant will clearly tell his guys, I paid. It's not me. The problem is with the bank. So what then happens is that I go, because it's an EFT file, it has a T+1 clearing cycle. The next time the damn thing clears is on Tuesday. That's when I get cash. I'd promised my family I'll take them on vacation over Easter. The money doesn't come through. Yeah. Yet the guy told me he's paid my salary. You can imagine the inconvenience. So what options am I left to do with? The Kenyans in the room know the word, ifuliza. Yeah, means I go for a digital loan, which is 3 times more probably expensive than I would have envisaged, because I have immediate money needs I need to take care of. And nothing further reinforces or illustrates the need for instant payments than that particular example. But actually, when that payment is sent, I should be able to receive my cash and use it. So I think that just tells you how our ecosystem is. And yes, we still have large value payments. They're real time in nature. The main interbank, significant in value, but I think where the activity is in the retail payments. I think I put out this slide because it's important, and I know we've talked about it in part of the conversations. I think remittances, very central. You talked about the issue of cross-border payments, and this is something that we at the central bank look at very, very clearly. You know, there's the G20 guidelines on cross-border payments. The financial FSB kind of put up a roadmap on what we need to be able to do. The 2027 targets around speed, access, and transparency. And I think from a jurisdiction perspective, the biggest challenge when we look at these things is that around the speed, almost 95% of the remittances that are sent into this country are almost credited instantly. Because what we've observed over time is that there's been a transition from the old, money union. I go in, cash, they ask me, give me a reference, that cash out kind of thing. So the last mile is that it terminates into your mobile wallet. So if I have a cousin in the US and goes on SendWave, the moment he clicks complete, within 2 or 3 seconds, I have money in my wallet. And a lot of the remittances that come into this country, the average value is around 8,000 shillings. That's around, is it $60? That's the average value of the remittance, which mainly is because, meeting day-to-day needs. I need to check out of a hospital counter, or I need to pay for my kid who's going back to school, or to do shopping for them. So that kind of support, and the need for that to be instant then becomes more imperative than ever. But I think the biggest challenge that we still struggle under remittances is the issues of cost. Yeah. So the current average cost for remittances that we looked at is at 9%, if I'm not right. I think the global target is for us to get it to 3%. And a lot of that is hidden into FX costs. Yeah, a lot of the money remittance providers and IMT will tell you, it is what is the word they use? Commission free or something like that. And yet the costs are loaded in the FX, and then that becomes very expensive. And we see that. I think government payments, if you're in the business of payments in this country, if you're not in government payments, then you're probably also missing the boat by a mile. I think government is very, very central in payments, 3.4 trillion worth of payments that are sent out, and this is just outwards. There's been increasing efforts in terms of government to digitize payments collection. You've heard of the 222 and the government digitization agenda. So it just tells you the need for us to be able to refine those payment journeys, especially government to person payment journeys that, for disbursements, but also for collections, person to government, to be able to facilitate that. And there's huge opportunities for us to be able to improve that journey. I think this is just our policy. So we did launch our strategy in 2 years ago. And I think this just talks through the pillars and the principles of that particular strategy. So this is mainly our policy document that tells us where we want to be able to go. I will encourage that you take some time to read it on our website. So in the interest of time, so I'll just keep on moving. I won't dwell on to that. But I just wanted to share what have we done well, and then what are our challenges. I know I talked that the areas we've done extremely well. Around financial access and financial inclusion. So our financial access numbers are very good. We've done very well, 83.7%, I think, in the last survey that was done in 2021, the FinAccess survey. A lot of that driven by mobile payments. So mobile payments has been a lot of mobile payments, to an extent, mobile wallets, very transformational in driving access. I think the conversation right now for us is really shifting away from access to the financial health elements of usage. And that number drops from 83.7 when you come to financial health to around 17%. And the issue is that what are the challenges when it comes to usage? So issues to do with insurance, for example. So insurance penetration is at 3%. There's a huge delta for growth in that area. So a lot of this financial health and usage of these financial services is the real focus. So is it an element of financial literacy? Do we need to put more effort in that? And how do we drive the elements of usage? And I think that becomes very, very important. So I talked about the beauty, what we've done very well in terms of really driving the adoption of digital payments. Now, from a central bank perspective, that then translates, we measure that benefit in terms of cash displacement in the economy, yeah? And from a per capita basis, I know people will talk about UPI, PICs. From a per capita basis, nothing beats us. We are a highly digital economy. We have 2.2% of cash in circulation, and that trend has been coming down over the years. Yeah, so, and this is data from IMF, I think, years ago, compared to similar countries that have a similar demographic distribution. We are doing very well. That number further drops down to 1.7. If I look at cash in circulation outside banks, when I say within banks, it also includes whatever is sitting in their vaults and stuff like that. But once you move it outside bank, it further drops to 1.7%. And that's the fight that we are having in terms of how do we displace that? How do we ensure that we need to continue to displace that? And that then leads to what are some of the challenges that we're facing, that we still think we have an opportunity to address, and technology as an enabler can actually help us address some of these challenges. And as a regulator working with stakeholders, we are asking ourselves, how do we address some of these things? One of it, which is quite evident, is that we, as a country, we are very limited. We don't like sharing. Everybody wants to do their own thing. And that leads to a lot of inefficiencies we see in the market. Whether it's ATMs, I'm sure if you go down the mall, there are ATMs all over. I mean, there's an opportunity for us to find a way to do that. Same with POS machines, whether it's agents and all that. For cash in, cash out, what are the opportunities for us to be able to share? So that even as you're solving, you're actually asking yourself, how will technology help me address that problem? And then you're building a use case around what is the problem that it is addressing. And I think if you tie that from an end-to-end perspective, then you have an opportunity to see what is it that we need to do. I think the other key thing which is very common in this jurisdiction, you'll see is how our interoperability is structured. It does work. I can send money across network. Sabine, there's no friction. It does work. But I think it's what happens behind the scene is the challenge. So we are built around a lot of what I call bilateral agreement kind of infrastructure. So there's opportunity for us to be, and that then breeds in what we see is that the barriers to entry, especially for the small players and the small fintechs, become very, very expensive. So if you are to build the integrations to all the banks, it becomes very, very, very expensive. So a centralized multilateral platform could be a solution. And those are some of the things we're trying to look at. I think we also talked about, not only is it digital payments, it's also about the cost and affordability of digital transactions. Because from what we are saying, we still have a challenge. We've made progress, but the cost of digital payments in this country is still very high. Expensive is relative. Different people think expensive is different, but we are just doing a typical household, not household. We are looking at a border. A border is that motorbike, the motorbike rider that you'd see in the Nairobi streets. There are plenty of them, who probably has an average gross salary of 20,000 shillings. Okay. So I think in our assessment and looking at the expenditures in a month, 2.5% of his income can easily goes into transaction charges. That is expensive, especially for the lower end of the market, what we call the most vulnerable. I mean, if you're able to take the hit and you earn it, it's okay. It's something you ignore. But I think when you come to the lower end of the world, it becomes a bit expensive. And we feel that there's an opportunity for that. And because of that expensiveness, what we see, then it translates in what we see. There's a lot of, then, especially I talked about a very, very entrenched mobile money system. So what we see then is the cash out numbers are still very, very huge. We do almost 5.5 trillion cash outs every year in terms of money. So I get money into a digital ecosystem at the end of it all. So if I pay my farmhand, it's cheaper for him to cash out and remain cash. So it's very hard to compete with cash, because not only is it instant, it is final and it's whatever. But so for them, it's those challenges that we're seeing. So even as you provide these solutions, if they don't address the issue of affordability, then we still have a challenge. And that challenge, we're seeing it especially to the lower end of the people. And the numbers show us 5.2 trillion still gets cashed out. That's the 1.7%. 5.2 trillion in our economy is huge. But that's the 1.7% that we're saying. How do we displace it? And I think with technology and efficiencies, we should be able to make a lot of these payments cheaper. Hence, then, once I get into the digital ecosystem, there's motivation for me to be able to stay there. And cost doesn't become a reason or an excuse for me to leave. Okay, I think the last one is just the issue that I talked about and that I alluded to it. This is instant payments. I think that's the direction, and we all understand and appreciate the value of instant payments, why it's important. We still have a significant payment methods that are not instant, but how do we then ensure that those are replaced? I mean, I talked about the checks. RTGS is still there. You may say it's high value, but I still see a lot of low value traffic going through the RTGS. But I think the transition and the conversation globally, even us, is that how do we move into instant payment systems? And the reasons are there are plenty. And I think there's opportunities for us to do that. And then this is just the challenges and my overall summary in terms of the message. Talks to what are some of the things. I think high cost, I've talked about that. The issue of exclusion, because of barriers to entry, I think becomes a challenge. How do we ensure that we address by creating a level playing field? The inefficiency we talked about that emanate from the bilateral agreements is one of the things. And then definitely the other thing is around just the whole cumbersome customer experience, which is very big from a market conduct perspective, is that you build in a product and a solution that is very, the payment journey is cumbersome. But what still is what we see is that the whole customer protection around that particular product, if something goes wrong, how does the customer recover, is something that we need to do better. And I think for Kenyans in the room, I always use the example, try send money to the wrong pay bill and try and get it reversed. It's painful. How do we ensure that from a customer protection perspective that we address those things? Because it's just not, as I keep on insisting, it's not about the technology, but also what supports it. Sorry. So I think basically that's, lastly is that what are our priorities? I think I talked about the need for us to move to full-scale interoperability. I think the vision is, how do I ensure that I pay anyone, anywhere? And I think that's the aspiration we're working with. Definitely, we're right now in the process of reviewing our legal and regulatory framework. We think we need to move to a much more progressive framework, taking into cognizance how the payment environment has evolved, and how do we address some of the emerging both technologies, but solutions that we see, stable coins and their impact on payments, etc. Definitely CBDC remains a conversation, exploring what is the use for CBDC, and if we were to go in that direction, what does that mean? Still very early stages, so no pronouncement whatsoever. Definitely, trade is big from a Pan-African perspective. We are moving into the era of FCTA, Africa Free Continental Trade Area, and they need to be able to integrate the continent, and payments being the rails that then enable trade to happen is a very big focus. So we have a lot of initiatives within the ESC, with SADC and the WAMSI to see how we can integrate our payment platforms that are cross-border. Yes, lastly, I talked about the issue of 24/7. It's more about the access, expanding access to our payment systems. This involves two things. How do we provide access to non-banks to access our gross payment settlement, our national payment systems? So there's a framework we're developing towards that, but also just access in terms of ensuring that we're able to clear and settle on a 24/7 basis, availing our RTGS for 24/7 settlement are some of the initiatives that are ongoing. Yeah, definitely. Lastly is the issue of customer protection. So I'll stop there unless there's anything. Apologies, I passed my time by 5-10 minutes, 10 minutes actually. Unless there's any questions, but not about the shilling and where the shilling is. I would be happy to take. I think we should need to move. Or if none, then I can. Yeah. Unfortunately, we've got to keep moving. I'm sorry. Okay. Thank you. Thank you so much. Thank you.
Simeon, one question. Although I would say we are going to be going to our cocktail. Are you going to be joining us? Yeah. All right. So we'll take one question.
Thank you, sir, Mr. Governor. My name is Joshua Adem, and I've been following from your introduction and from our earlier speakers But now I think you are the right person now to give us the direction on this. My question is here. As we are doing our transactions, there's the lion in the room. This is what we call cryptocurrencies and Bitcoins. Where are these in the transaction? Because they're also coming up as modes of payments. And I've not heard of any of our speakers touching on this. Or do we take them to be the wrestling advert? Do not try this at home. So tell us, where are the Bitcoins and cryptocurrencies in our payment transactions? Thank you.
That's an easy question. I think from how we view it, they're not currencies and they're not payments. They're virtual assets, mainly used for purposes of speculation other than payments. And I think there's a forum that I think the CS of National Treasury has put in place, a task force, to look into how then do you regulate virtual assets. And that then involves various sector regulators, the central bank, capital markets authority and others to look into that. So that process is ongoing, but the outcome of that then will inform how virtual assets are used. But I think in the context of payments, there are debates and we can argue and we can go into that. Are they payments means? Are they not? It still takes me back to what's the definition of money? Go back to my basic economics. It's a unit of account, medium of exchange and all that. So do they meet all those three criteria? I don't think so. So they're not currency, but so they're mainly looked at as assets. But I think from a CBK perspective, let's await the outcome of the task force, and it will give much more direction as to how then they are regulated. Thank you.